Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Thursday, October the 20th, the year's 2022. Let's talk trading. Money decisions with Walmal. These videos are for educational purposes only. Your results may differ from mine and differ from Walmal's. Walmal, yesterday, I was talking to the traders about, looking at the money. And so I thought I needed to follow it up with some money decisions. Things like how much you're willing to lose, how much you want to make on a particular trade, how much you want to make for the day, maybe what percent return you're going for. Lots of different, money decisions that you need to make, and you need to make them before you trade, not during the trade. Oh, there might be an exception or two, and we discussed that yesterday. What's your take on it?
Yeah, your previous statement is absolutely accurate, and that is all these decisions, they really need to be made up front. Not during the trade, before the trade, I'll push it back even further, before the trading week even starts. There should be, you need to, I love your exit playbook. I wish I used it more often than I do, but, you should have all those type of things, put down either on the computer, or on piece of paper, on an index card, something. You can't. Anybody that's here in the U.S. on Sunday afternoon in the fall, what do? We watch football. And you go over and you watch them on TV, right? And the defensive coordinator, the offensive coordinator, what do they have in their hand? Every single one of them's got a clipboard, right? And what's in the clipboard? It's their plays. And and on those play sheets, it's not just the way you're going to go and execute the play, but there are other things too that are on that sheet. What's on that sheet also is things like, okay, what do we do? What are we looking for at particular parts of the game? What are we trying to do under certain circumstances? And trading should not be any different. We're playing a game. Now when I say a game, I don't mean it from a caviar type of point of view. I mean, it's a game in the sense that we are out there trying to execute something and make it work. We're trying to go out there and actually, win money, and that's hard. And the reality is, I don't care how smart you think you are. I don't care how fast you think you're able to think on your feet. You may be one of these guys that can go into a board meeting and, think on your feet, dance on your feet, as they like to say, real quick. But the problem is, when you're talking about markets, you're not playing against, 2 or 3 people sitting in a boardroom with you. You're playing against thousands of other traders. And, if you can't, and make it worse, is at least in a boardroom, at least when I've been in boardrooms, you can read the faces of the person on the other side of the table. You can say, when you're saying something, you can tell if the person is with you or against you. Just by looking at their body language and by looking at their facial expressions. Well, here's the problem. I'm sitting here in front of my computer, and there's nobody else in the room, and so I'm kind of stuck where I'm at. So, long introduction to this whole idea, of money, and the reality is, how do you make a decision as to how you're going to go and play the money? For me personally, I have set goals that I have for the week, what I want to make for the week. I have a goal with what I want to go and make for the day, and sometimes you make them and sometimes you don't. And that's just part of who we are as traders. You don't win all the time, you're going to lose. And here it is Thursday. I can't remember what day it was. It was either Monday or Tuesday. It must have been Monday. I took a losing day. Okay? There you go. It just happens, and you don't get upset about it. I didn't play anymore. I just said, okay, write it off. That's just a losing day. And now here it is Thursday, October 20th, and I'm now up for the week. And not only am I up for the week, I'm actually at where I should be for goal for the week. So, I had a couple of days after that that were pretty good days. And that's the way trading works, But the thing is, you got to keep yourself in the game, and keeping yourself in the game means that you need to go and say, hey, I'm having a bad day for whatever reason. I don't think I'm feeling particularly bad. I don't think I'm making bad decisions. It's just the market didn't go my way. And I hit my limit of what I was willing to lose for the day and said, that's it, I'm done. And I think you called me TRO, and I said, I'm done. And he said, well, how much did you make today? And I said, I lost. It's just the way it is. Sometimes you just lose.
Yeah, and it's funny because you had said you had gotten burned on the launch pad, and yesterday during the video, I talked about a trade, or what was going on the screen at the time, and I was saying how if I was going to take that trade, how I would trade it. And let's see if I can find that location. If I remember correctly, it was right around the double O. Let's see.
We've got a lot of good trades around the double O this week, that's for sure.
I think it was right around 1200. Was that what it was yesterday?
Yeah, that's where it was running.
And yeah, I think, if I remember correctly, because I saw there was a return bar here at 1224, about 1225, and I told the traders, and if I remember correctly, price was running up here when I was making the video, and right when we shut off, I think it was going across the 1210 line. Well, then it retraced back down to the double O, actually went below it, and then it came all the way back up, and then it wound up hitting. No, actually, it didn't retrace to the double O. Oh, I think it did. And then, because I remember when I came back a little bit later, I looked, and then price came right up to about within half a pip or so of the of that open, pulled back, and then came up and touched it a couple of more times. So you can see what would have happened had you put your TP right at that return bar open, and if you had put your stop loss, I believe I said if you put your stop loss somewhere around the 90, it never would have threatened the stop loss per se, and then but over maybe an hour later you would have TP'd and made your 25 pips. But that's what happened yesterday. And it's one of those things where, I was talking about, looking at money and, do you, trade tick by tick, managing the risk, and then taking profit, or do you place a bet, say, okay, here's my stop loss, here's my TP, and then you just walk away and let the computer tell you, oh, you either had a loser or a winner.
Right. And either way, they're both legitimate ways to go and trade. There's nothing wrong with either method. It's just that you need to figure out how does that fit into your style of trading. And your style of trading is made up of a number of different things. It's obviously made up of emotion, how you're able to control your emotion. If you're a person that's very, very skittish, very, very emotional, very, very impulsive, then you're probably better off set it, analyze charts, figure out where to get in, set your stop loss, set your TP, walk away, turn the computer off so you can't even check on it, and come back an hour or two later, and see where you're at. If you know that you're a very, very impulsive type person who does those type of things. On the other hand, if you know your person is a little bit more disciplined, then maybe you're better off to go and not do that. It all comes down to who you are. So one, it's you got to know your emotional status and your pro. I can't say the word, so I'm not going to bother. And your the things that will set you off to go and or trigger you to go and do certain things. And so that's fine. The second part of it is, and this is a big part. If you're a part-time trader, you may not necessarily have the time to sit in front of the computer all day long. I'm blessed in the sense that I can sit here all day long and trade all day long. I get up at about 6:15 in the morning. Do all the things that you do when you get up. Move around a little bit, get your head going a little bit. Brush your teeth, get into the office, set the computer up, look around, see what has happened, and then I'll start trading somewhere around 6:45. And I'm blessed that I'm able to go and do that. And I can trade, and I usually trade until probably about, somewhere around 10, 11 o'clock, and I can go and do that. But if you got, if you got what they call a JOB, you may not have that option, unless you go and do this during the Asian session. But that becomes difficult unless you're single, because, if you're married, then you've got your spouse that's going to want to go and, take up some of that time. You've got dinner that you're going to have to go and do. And, and if you happen to have children, you're going to have that clawing at you. And so you're going to be in an environment where it's going to be very difficult to close the door and just shut those things of life out. So you need to go and put all those different things into the bucket and figure out, okay, how do I go and organize these things in such a way that I'm able to trade and trade profitably from it.
Yeah, and one of the things about the money is you have to figure out how much you can lose and not be mad, not be upset, not where it puts you in a tailspin. So is it $10? Is it $20? Is it 2% of your account? You have to figure out what won't put you into a tailspin or cause you to go tilt.
Yeah, well, my famous expression. The amount that you should risk on the trade is how much you're willing to go and take cash out of your pocket, walk out to the middle of the street, and set it on fire. That's how much you should risk. Anything more than what would bother you, then that's probably your limit. Now, what I can also say is that as you go and do this, play this game longer and longer, you can go and do that. And I think, Kiro, you watched me do that, where I went from a particular amount that I was willing to lose, to a much higher level. Now, part of that is because my account grew, and part of it is because I just got used to going, knowing that it was going to go that much against me. It's a combination of the two things. But you need to go and know what you're exactly right. You need to know what your levels are. You need to know where it's going to go and bother you. Because the problem is, when it starts to bother you, it can mess with your head, for the next day's trading. Let's go and just say that that you can go and burn up, a $100 bill, and it doesn't bother you. And you say, well, I'm just not making enough money. So what I need to do is I need to go and raise that limit, and I'm willing to burn $200 up. And then you burn $200 on you just happen to have a trade go against you, a day go against you, and you burn up $200. And now you see, oh, shoot, that's, that was a lot of money. And, you get into the trade the next day, and the only thing you're thinking about is how much you lost yesterday. That's when you're in trouble.
Yeah.
That's when you're in big trouble.
That's for true.
You can't think that way, sir.
Yeah. And guess what? The fastest 15 minutes in trading is over. So, fellow traders, leave a reply. Let us know what your thoughts on money and how you follow money. Because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.